June 2025 will go down as one of the most volatile months in modern financial history, not because of a recession or interest rate hike, but because of war. Real war. When missiles lit up the skies over Tel Aviv and Tehran, the world didn't just panic, it reallocated its money. Investors shifted billions within hours, and the first place they ran? Gold. Prices skyrocketed past $3,400 0 cents an ounce, driven by pure fear. In Dubai's markets, it nearly touched $3,500 0 cents. Analysts compared the surge to March 2020 when COVID sent markets crashing and gold soaring. But this was different. This wasn't a virus. It was a war between two heavily armed, nuclear-adjacent nations. Israel was bombing Iran's nuclear sites, drone factories, and military compounds. Iran was striking back with long-range missiles and targeting American military bases in the region. Civilians were dying by the hundreds. Oil tankers rerouted, supply chains stalled, and under all that noise, investors were placing big bets on where the world was heading next. Gold, traditionally the go-to asset during war, became the first to move. Within 48 hours of the first airstrikes, central banks across Asia were reported to be buying aggressively. The fear wasn't just about missiles, it was about a regional collapse. If Iran shut down the Strait of Hormuz, oil exports would stop, global shipping would choke, and inflation would spike globally. That alone was enough to push gold higher, but it wasn't the only reaction. Something strange was happening in crypto. Bitcoin, the so-called digital gold, initially crashed. As war broke out, Bitcoin dipped under $100,000 0 cents, falling nearly 10% in 2 days. Why? Because in moments of real fear, even the most aggressive traders pulled their money. People wanted cash, not code. But then came the twist. Former US President Donald Trump, still wielding influence and running a pseudo-diplomatic shadow operation, stepped in. Standing on the White House lawn, flanked by American flags and flashing cameras, he furiously declared a ceasefire between Israel and Iran. "Effective immediately," he posted. "Nobody will be hurt." But hours later, bombs were still falling, and the truce was already breaking apart. Still, markets listened. Bitcoin rebounded fast, climbing back over $105,000 0 cents in under 24 hours. Ethereum surged too, and even altcoins like Solana and Chainlink saw sudden green candles. Traders weren't buying the peace, they were buying the chaos. Crypto was no longer acting as a safe haven, it was acting like a volatility sponge, absorbing global fear and turning it into digital profit. Hedge funds rode the wave. Analysts on Twitter called it the ceasefire rally. But others weren't so convinced. They warned that crypto's next big move would be determined not by charts, but by the next missile. Meanwhile, oil prices followed their own violent roller coaster. When Iran hinted it might close the Strait of Hormuz, the narrow waterway that sees 20% of the world's oil pass through, Brent crude exploded past $81 cents per barrel. US crude followed. Energy markets went into panic mode, especially as Iranian drones began buzzing dangerously close to Saudi and Emirati refineries. The Pentagon responded by moving naval fleets closer to the Gulf. Insurance premiums for tankers doubled overnight. Oil traders, already spooked by years of geopolitical tension, started pricing in what no one dared say out loud, a multilateral regional war. Then, just as fast as oil spiked, it dropped. Trump's ceasefire announcement, combined with emergency talks among European diplomats, cooled oil back into the $69 0 cent 70 range, but the damage was done. Gas prices in the US rose 40 cents in a week. Asian economies like India and Japan, heavily reliant on Middle Eastern oil, braced for inflation spikes. Airline stocks plummeted, shipping companies issued warnings, and beneath all of this chaos, another market was quietly waking up: defense. Lockheed Martin, Raytheon, Baykar, Elbit Systems all saw their stocks jump as news of fresh military contracts and weapons deals leaked into the press. Israel, facing long-term conflict, demanded more Iron Dome interceptors and AI-based missile systems. Iran, backed quietly by Russia and supplied by Chinese tech firms, mobilized its defense networks, even hinting at cyber warfare capabilities. NATO members called emergency meetings, and in the background, America's tech giants were under pressure, not just to maintain servers and connectivity, but to defend their networks from possible Iranian cyber attacks. The financial world wasn't just reacting to bullets, it was preparing for digital war. Back in the markets, gold began to dip slightly after the ceasefire, but never dropped below the psychological $3,300.00 line. That wasn't profit-taking, that was investors hedging. The message was clear. They didn't trust the peace to hold. And they were right. Within a day, an Israeli missile struck Iran's notorious Evin prison, killing a Quds Force general and destroying part of the facility. Iran's response? Not just retaliation, but a promise. Any further aggression will be met with decisive force. That warning sent shockwaves across every asset class. Stocks dipped again. Crypto stalled. Gold began crawling upward once more. Even the U.S. Treasury market, known for its stoic behavior, showed signs of stress as bond yields dipped and foreign capital rushed in. As Trump boarded Air Force One to attend the NATO summit, his so-called diplomatic triumph was already unraveling. The ceasefire had become a meme. Social media lit up with footage of airstrikes, funerals, and markets in freefall. European leaders begged for calm. Russia and China issued vague, carefully worded statements. And in boardrooms across the globe, institutional investors began reshuffling their portfolios. Analysts warned of a cascading effect. If Israel escalates further, Iran may attack Saudi infrastructure. If that happens, oil hits $100.00. Gold breaks $3,600.00. And Bitcoin? It becomes either a historic hedge or a historic failure. Now markets are entering what many are calling the uncertainty zone. Every investor is asking, where do we park our money when the world is on fire? Gold is stable but expensive, oil is volatile and political, stocks are fragile, and crypto? It's unpredictable, but in that unpredictability, some see massive opportunity. A single tweet, a drone strike, or a diplomatic phone call could shift billions overnight. And that's exactly what makes June 2025 a turning point, not just in global politics, but in financial history. The war in the Middle East may be localized for now, but the economic shockwaves are global. From Wall Street to Tokyo, from hedge funds to retail traders, everyone is on edge. Because in a world ruled by headlines, fear, and firepower, the next move isn't just about money, it's about survival. If you want more breakdowns of war-driven market chaos, gold surges, and crypto crashes, smash that like button, subscribe for real-time financial war zone briefings, and follow before the next missile changes everything.